Yeah, hello and welcome to another update video about AGIX. So we see a little bit of pullbacks. We see a few pullbacks in the crypto space today. For example, AGIX is pulling back. Yeah, some of the other coins as well. Of course, it's a little bit too early to say if wave one has topped now, but this is something I'm watching for now. So I think there is certainly the case to be made that after the break of the trend line, it's not a super, it's not a great trend line anyway. I mean, you can draw that in different ways. That was just sort of a first idea, like a signal. You could even draw it that way. It might be more relevant, but there are different ways how this trend line can be drawn. That's the problem with trend lines. However, I use trend lines sometimes just as initial indication. Now, looking at it now with a price action like that, it might be more accurate to draw it like that, but then it's broken, right? Now the problem is, what do you use? Do you use the just the candles or the wicks? Now if you draw it like that and you just use solid candles, it's not broken, okay? Now just be aware of that. So trend lines can only be a first indication. They are broken trend lines are not a reliable signal necessarily, but it can be a hint. So it's certainly part of TA. Well, but anyway, we are looking forward to a pullback in a wave 2 here. Could start at any time. I guess if Bitcoin, Ethereum are doing it, a lot of the altcoins will follow. And then it will be this area in which AGIX will tell us the truth. So we're currently investigating, obviously, if AGIX indeed has bottomed here in a larger wave 2 on the 10th of June. The price was 17.3 cents at the 78.6 retracement. You can see again the price has respected the FIBs. Respect the FIBs. Always respect the FIBs. And it has moved up in 5 waves since then. Yeah, each of the subwaves is a 3-wave structure, corrective, due to it being a diagonal at best. Now, I always have to highlight it because we have a lot of new viewers and so on. And I need to bring across as much information as possible. But you need to be aware that any diagonal structure, which means it's a 5-wave move up, but you have overlaps between the waves, and there are a few other things that we talk about in the membership a lot if you're interested. But a diagonal cannot necessarily be trusted. It is something to work with. It is a first indication that price might have bottomed on the 10th of June. Yeah, but it needs to prove itself always. And how does it do that? It does that by pulling back in a wave 2, by holding support at or above the 78.6 retracement, which is in this case 19.3 cents. And then it needs to break above the high of the first 5 waves, which would be at 26.9 cents. This is the support area, so-called trend reversal area. I have included even the 38.2 fib level, which is at 23.9 cents. No, it's 23.3. Need my glasses. And what did I want to say? Oh yeah, and the A wave oftentimes hits this level, yeah? And then the B wave should react, but would only be a relief rally, which is corrective, unless it finishes the wave 2 already here, which could be the case, but probabilities suggest typically a wave 2 will come a little lower than the 38.2 retracement, but you can never rule out that we get a shallow one, okay? You can never rule that out. Now, one more, let me take the white trend line out. We don't need that one anymore. I think what might be worth doing, and again, that is just trend lines, I just talked about that here. Coming back to the trend line, maybe just hitting the 38.2 fib level. We could be. So you don't know, if it comes back to that level and it reacts and it takes off, then it reacted to our trend reversal area and it goes. So tactically, I like to scale into these support areas. There are so many different strategies. Everybody needs to find their own, of course. But the idea is you obviously never know if the wave 2 is really over until it's gone, right? Until it's rallied. Therefore, I like to scale in, and if you never get your entire position filled in here if you scale into these support areas, but if it goes and it's corrective, then you can scale out in resistance and it comes back lower. You can buy again, gridding, basically, what a grid bot does. Or if it goes, then yeah, you don't have your entire position filled, but trade still goes into your expected direction, and then you can always scale up on the way in retracements. So it's the area between 19.3 cents and 23.3 in which price ideally comes in a wave 2. If it doesn't even get to the 23.3 cent level, we're probably not in a wave 2. But at the moment, I don't want to say I would expect we are in a wave 2, but certainly I'm watching if we are. But at the moment, the move down is not clearly impulsive yet. Typically in an A wave, we would be looking forward to an impulse. And yeah, so it's not enough data yet, because it's not really a deeper retracement than we had here, yeah, or in any other retrace. You know, this was not much stronger, and it still rallied afterwards. So that's the challenge with these diagonals. Again, we talk about it a lot in the membership, but the problem with a leading diagonal is, in contrast to an ending diagonal structure, it doesn't really have an endpoint. It doesn't really have a target. It will rally until it gets exhausted, and then we can move up support with it. And when price comes back into support, then it's a valid setup. You know, we don't really have a setup here at this stage which is reliable in any way. Bear in mind, a lot of time in trading is spent waiting, and you certainly don't want to make some, bad decisions by not being patient enough. Okay, that's my update about AGIX. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.